I want to bring in Bloomberg Best Daragh Maher. He's the deputy head of global FX strategy at Credit Agricole. And Daragh, why don't you give us your assessment of the downgrade of our debt and what people were expecting to be the impact? I think many people thought we were going to see a race back into the Swiss franc. We're going to see that hit another new high, and that you're going to see people exiting the dollar. But yesterday was sort of a reversal, sort of ironic trading going on yesterday where treasuries and the dollar were concerned.
Yeah, I think so. There wasn't quite as much drama in the dollar as we'd anticipated. I guess we had reassurances from a lot of the major overseas holders of treasuries, particularly in Asia and Russia, and that kind of helped. Of course, the other complicating factor is we had the ECB doing their bit in the background to buy Italian and Spanish bonds, and that again muddied the picture a little bit. So, you know, net we seem to be rather lacking in drama, particularly on Eurodollars, you mentioned.
Now I've got to ask you, Daragh, the German market closed down. Germany, in theory, the backstop. Does that sort of put a little kink in the armor of the euro in any way?
Yeah, absolutely. I mean, I think it's one of the intriguing things that people looked at today was the CDS market, the fact that Germany traded wider than the UK on the CDS market. I think it's reflective of the fact that there's a fear in the market that all this aid that's been given to the periphery, it's beginning to dilute, if you like, the quality of the core. And that, you know, that was one of the big headaches for the euro before it was even really put into practice. So that was a significant development today.
Daragh, when you're looking at currency movements right now, and you had to rank sort of the biggest issues that are moving currencies at the moment, is it what is happening in the U.S., is it what's happening in Europe, or is it, you know, the two of these things happening at the same time?
I would actually, if you like, the big three, global growth, US downgrade and peripheral story, I would say the US downgrade is not the biggest of the three. I think at the end of the day, we're coming back to the global growth story. We're still rounding on this peripheral story. They're the two, but they've got pretty much equal billing, I would say. The downgrade, not so much.
Hey, Daragh, when you talk about global growth, commodities, that's been the big story. So what about the commodity currencies like the Aussie dollar, the Canadian dollar, et cetera?
Well, I mean, Aussie in particular, Mark's been looking for an excuse to bash this one. It's always felt like the air was pretty thin when we got up towards 110 against the US dollar. It's had a reasonably traumatic time of it of late. You know, if you're looking for drama in the currency market, it's there to a lesser extent in Canada. But, you know, Swedish krona, Norwegian krona, all these kind of risk-on currencies, they've really been bashed over the last week or so. So that's, I think, where people are looking for value.
Is that what you're recommending to clients right now, Daragh? I mean, what currencies do you like over the short term? Which ones over, say, the next year, slightly longer time horizon?
Yeah, I mean, got to admit, short term, I'm not being particularly brave. I still like the Swiss franc. I actually think you could buy the Swiss franc against the yen because the intervention threat is less in Switzerland than in Japan. I think you're going to sell the risk-on currencies that I've just mentioned. Well, but beyond that, you know, taking the bigger picture view, I do think the dollar represents value at these levels, and I suspect in 6 months, 12 months' time, we'll look back and say, you know, that was the time to get in. That was the turning point potentially.
All right, Daragh, we got to leave it there. That was Daragh Maher of Credit Agricole.